Good evening, ladies and gentlemen. CrudeSA Trading Frank again. This is part 2 of the end of the week strategic broadcast, strategic broadcast videocast. Title of this one, as I mentioned in the previous one, is the week after the defeat of the ACHA, new healthcare bill, and the ramifications of that on the market. Extremely important as we move forward into this week, which is a critical part of the week for the market, not just because of what happened last week, but the fact that it's the end of the quarter, end of the first quarter, ends on March 31st, 2017. Extremely important that you all focus and truly work off the very real-time, very tactical, very precise charts that I produce during the day in order to effectively manage your trades. Large profits can disappear rather quickly, or you can make some stupid mistakes and sell when you're feeling a little bit scared. And in order to negate that type of, I would say, repeatedly bad behavior on the part of a good trader, I suggest that you understand and try to focus on all the different levels that I show where you should be reacting to the markets. Enough said. So let's look at this here as I was explaining earlier. So we are right now about to break the 50-day moving average, which is roughly somewhere around, well, here it is, not somewhere, it's 2329.75. We are pretty much, and the 50 is somewhere in that vicinity. As you can see here, looking at the size of this candle, it looks like we're going to break, slip and slide. We shall see. It could be a very powerful pivot point, where the markets bounce off really hard, but generally what happens from past history, it slides below the 50. You hear that cacophony of negative comments coming out of the media from other traders getting freaked out, stops getting triggered on the institutional side, and then the market attempts to bounce to reclaim back the 50. If multiple bounces over the 50-day moving average fail to materialize, we are going to come down very quickly into the 2300 level, which would be welcome because that was the previous breakout level, as I explained in the first video, and that would be a sharp move higher from that to retest the 50 again. Another failure, wouldn't be surprised to see 2250, and all that, in my opinion, is in the works for April. Not in a straight line, but is in the works for April. All right, so having a technical bias in trading is extremely critical, and most importantly, very profitable. Looking at the simple stuff, the full stows here are oversold. As you know, the stochastics is simply the second is a derivative of the relative strength index. Right now, it's below 20, and but the structure is telling me, given what I'm seeing here, that it probably is in a bottoming process, but probably hasn't fully bottomed yet. I don't know. It can go as low as, if you can notice back here, during the elections, right before the elections, we hit a low of 4.62. That's what you see here, right? 4 points, like around 4. Let's put it this way. Somewhere in the 4s. Well, right now we're still at 12.967 as of right now, Sunday, 7:35 p.m. But so we could go lower, and that means that break that I'm talking about. Okay. Let's take a look at the more tactical version of this. That was more of a broader picture, and the tactical version of this, which I employ extensively during the day and share with all of you, that's the SPY, obviously, not trading after hours. So we have to focus on the E-minis. This is the 1-hour version, and this is where we are. We played this like a fine violin. Like I said, the movements here. The movements up here on the SPX calls, the SPX puts here, which delivered almost 80%, I believe, from 9 to, yes, I think 60% or so within a matter of an hour. The big candle moves. I said we would retest this level here, which was the previous low of Wednesday. We did retest that. We had a very sharp bounce. This is what happened on Friday afternoon. After the ACH failed, everyone said, that's it, it's going to be all over. Market came down, bounced hard off this level, which was a 2332 level on the E-minis, and immediately bounced really hard. fast traders, and I'm certainly one of them, could easily get about 40% on the move if they were simply following what I kept on showing well ahead of the game. Okay? And it's not the only chart that I use. Like I keep repeating, I use the quad algo HFT charts. I use the investing.com, which we're going to go into next on this 25-minute segment of this video cast. All the tools are there. Just remember one thing. Because I'm unscripted, I don't read a teleprompter. I say it the way I do it, the way that's been successful, and the way I believe should be said. Not some cloud, building castles in the sky. It is not the content that I'm delivering that's not making you the big money that you should be making, or the money, or any money that you should be making. It is you and your inaction, or maybe your fear, maybe the little voices in your head. And do read that article that I tweeted out today about how to strengthen your willpower and your on Twitter that I put out this afternoon. The one that says that the most insane way to be smarter, confident, and resilient. Okay? Read it. Print it, read it, post it out there. Doesn't matter what age group you're in. You'll benefit from working out the muscles in your brain, your cranial muscles, your brain. So the bottom line is, it's not the content that I deliver. It's what you do with it is what is holding you back. If you're doing okay, you can do a heck of a lot better. If you're doing good, well, you can do a lot better. And if you're not doing anything and losing money, despite all this very powerful trade alerts and charts and stuff that are posted, fantastic trades, then you got to change your behavioral pattern. You got to modify. You got to go into mental calibration. And only you can do it. I can't do it for you. That's all I got to say in the form of a True to Say Trading Bootcamp lecture. Okay? So at this point, we're broken below that. We're futures are down 15.5. So we're going to try to see here on the 4-hour chart what we can do. And on the 4-hour chart, bottom line is we are right now on the 4-hour. We have a, not on the daily, but on the 4-hour, we have a definitive crossover of the 34 and the 50. What does that mean? It means it's bearish. In other words, the resistance is up here, 2361, and they're both downward sloping at this point. And the 2354 are going to keep on acting as powerful resistances. So the trend at this point in time, it's pretty simple, is lower. Doesn't mean a straight line lower, but just the overall trend is lower. Unless we break well above the 34 and the 50, that's called the trend change. We are not going to basically get towards this 2390 level. That looked very achievable when we were starting to move higher. So that is not the case. There is a trend change on the shorter term picture, intermediate term picture. And it's clearly being seen here in real time on this stuff. Doesn't mean you got to be bearish. You have to really put out a heck of a lot of puts and stuff. This market will rally 100 points against you and just wipe you out. I'm just saying, just showing you the broader picture. So saying all that, again, at this point, 2300, that was the big breakout level. Big monster short squeeze back around the first week of February. Okay? So at this point, we are going to, it looks very likely. I don't know if it's going to happen this week, but it can't. If it happens this week, I'm happy. Because at 30 points from here, roughly, 30 times 6, that's roughly 180 Dow points that you're looking at to be on the downside. That could be extremely profitable on the good, we zoomed in. So 180 Dow points from here, from 2330 down to here. The faster it happens and we're positioned right, you make a ton of money. Just imagine 30 S&P points, you have S&P puts in the money, slightly out of the money, you're golden. You've done it before. So let me draw that line here for you all. That was a trading band that we were trading in. Now we could, if we get that, let's say scenario 1, fast and furious by, let's say Tuesday, tomorrow and Tuesday, pure panic, stops been, stops triggered, all kinds of stuff. Then get ready to, get ready to be aggressive again for the next 24 to 48 hours after a big bloodbath of that magnitude. Now, whether or not it's going to, when the markets are going to make it that easy, I can't tell you that. It never makes it easy. So let's draw some lines here. So this is projecting down. Yep, there you go. 2300. That is a downward sloping megaphone for people who are not familiar with this pattern, which in the best case scenario is looking at 2381, and there you go. All right, you see this megaphone? 2300. We are going to go to 2300. And all of these lines, as I'm doing it in real time, are that's the megaphone junior, if you want to call it that way, pushes it out to 2368. So here are the levels to 2370, let's say, is the first megaphone resistance on the upside. So don't get super excited just because the market's turning up and it's going over 2361, because at that point, bang, there's going to be big sell programs at 2370. Big ones. At this point, 2354, and these are on the E-minis, which also happens to be this downward sloping 34 SMA, is going to be the first level of resistance. So if somebody, like I showed, if this turns out to be a dragon bullish formation, because remember, futures down 15 doesn't tell us anything about what's going to happen tomorrow morning. I mean, tomorrow during the day. We all know that. So if this is a dragon bullish formation, as I showed out, this dragon bullish formation, as I showed as a potential scenario on Friday, will play out to 2355. What does that mean? It means a lot of money. It's really what it comes down to. You got roughly about 25 S&P points for this dragon bullish formation to play out. Let me change the color of this thing here. There you go. Okay, this one. So this is almost 25 points. Pretty damn good, 25 points. When was the last time you carried your trade for 25 points? I've done it a couple of times. In fact, I've done it quite a few times. Not the whole lot, because I sell along the way, but it feels good, believe me. All right. So bottom line is, the other big dragon bullish formation is this one, and that's at 2370. Once we break over 2370 and 2380, we have something called the TC, which is a trend change, which is great. And all this can potentially happen. Goes high and test the highs. Okay, so let me clean this out. And, oh, okay, I did it. One second. Let's do this. Exit. Okay, there you go. So, to me, this is a very mathematical pattern here. If we break below here, we're going to test this very quickly. If we bounce over these levels here, we are basically going to create that dragon bullish formation. Okay. I really do apologize for the zoom function. It's very annoying. I know that. All right. Let's see, we slip and dip a little bit, but we hold this level. We'll move to 2354. You want to be a big seller at this 2354 level. Wow, zoomed in there. Okay, right here, and believe me, I'll fix this in the next video, because I know why it's doing this. There you go. Okay, and the max you want to go to is 2370. Now, individual stocks will do all kinds of stuff, and we play them very, very well, as you know, during the day. But you have to be quick. You have to keep an eye. Can't be just like, oh, it's going to go straight up and all that kind of stupid statement that retail traders sometimes make. So that's where we are with the version of what's happening with the futures and what the market can do. Let's take a look at this here. We'll bring this in. 1 second. Okay, that's better. That's better. All right, good. Now, let's focus on this chart for a bit. All right, this is directly off my browser here. Good. So let's take a look at this. I've been showing this chart for since the flash crash. I call this the flash crash. And you can see that, and this is a real-time chart, and it's free. It's a 15-minute real-time on investing.com. Put your email. You've got to use a platform. At least one of your platforms for charting has to be the same as what I'm putting out. I use 4 different platforms: Thinkorswim, investing.com, Quad Algo HFT, and time to time you use freestockcharts.com, which is Warden. So one of your platforms has to mimic mine, or else you'll never know what the heck's going on. So saying all this is one of the easiest ones on the eye, and you can see here that we are creating a small, we seem to be holding the lows. We seem to be somewhat starting to base a little bit. It means nothing, because at this point, this downtrend line here, each of these lines are downtrend lines, intersects at around 23.24. So that's roughly another 6 S&P points on the futures from where we are right now to down to 23.22, let's say, or 23.23, 7 points. So futures could be down. Just to give you an example, 20. We could be down minus 20 at the open tomorrow, and it could be still a great buying opportunity. Because at least according to this chart, it'll be a retest, again, of this downtrend line. In the meantime, this was the scenario as of Friday. We played each of these monster moves, which happened within a time frame of maybe 5 to 15 minutes, very effectively, both long, short, right? And as you can clearly see here, that if we recapture back the lows that we kept on retesting, which was approximately around 23.30, just keep that in the back of your head, then we are going to have another tradable bounce. That tradable bounce doesn't mean that we are going to basically rip and go all the way up here. That tradable bounce simply means that we are going to basically hit each of these resistance levels along the way, and that is your trigger to take staggered profits along the way. So first, if you bought here, let's say for example, futures guys, that we have traders in our group who are futures traders who extensively use my futures charts, my ES charts for their trading, and they've been extremely successful. You can talk to them. So at this point, one could basically put a stop maybe down here at around 23.27. This is for futures traders. Roughly about 4 points, 3 points, and you got an upside here, possibly of filling the lower gap, and you got 6 points here. There's your downtrend line. So anyway, without getting too much into that, the key is that, let me change the lines again. The key is that you have to understand, and the more you practice using this chart, the better off you will be in your day-to-day trading. Because it doesn't matter whether you're, especially when you're trading the high momentum stocks, the Tesla's kind of doesn't always follow the market. But whether it's Amazon, whether it's Apple, Goldman's been very weak lately, but generally follows the market, or leads the market, I should say. But generally, these high momentum stocks tend to follow what's happening on the real stage, which is basically the futures markets. So one way the bulls will interpret this is that this is a, oh no, there's a zoom attack again, hold on. Is that this is a big dragon bullish formation. I've shown that before. Right? Double bottom, dragon bullish. That's one way to interpret it. The other way is that we're going to break down, test this, and if we go below that, then we're looking at roughly 2300, which should be, from a tactical standpoint, a powerful bounce, because that was a significant breakout in the market, 2300. So we went to 2400, we give back 2300. Markets like to follow, or at least S&P likes to follow 100-point corrections. Okay, so 24 to 2300 is 100 points, and that's very quickly 100 points is roughly a 4% correction. If we go to 2300, we have a 4% correction in the market. A short-term 4% correction generally leads to very sizable bounces, not necessarily to the highs, but a sizable bounce, which can be very lucrative for a trader. Remember, traders can make a lot of money regardless of what type of market they're trading in. It's a matter of trying to understanding what these levels are and where they're going, and that's why my service keeps on providing such tactical and very precise tradable charts for people to basically act on. So at this point, the bulls will tell you that this is a double bottom and stuff. We'll see. We'll see. A slip and slide down here would be a buying opportunity. And remember, I'm not just showing you this and then disappearing for the rest of the day. I'll be there putting out the levels, but so you guys can act on it. Simple as that. Now, trying to short the market for this small a move down could be dangerous, because at this point in time, there's a lot of bearish sentiment out there. Mom and pop has now retrenched back in the cave. They put money in the market right after the Trump election. After President Trump got elected, they felt good. Markets were soaring. There was a sense of optimism. There is still a sense of optimism. It's not that they just yanked everything out, but they're feeling nervous again. Here goes the market. Traders are the same way. So, so there's a lot of bearishness out there, and trying to, after a large drop in the market from here, to be honest with you, we have actually dropped from here all the way. Well, we're pretty much, this is the downtrend line. So it's been quite a bit of a drop. So when you drop roughly 100 points, or a little less than that, within a matter of 1 week, you got to be careful on the shorting side, because it's not a one-way slide down. All right, just stop thinking so linear. You got to think more technical, more algorithmically, and I help you do that. So that's where we are. Okay. Let me clean this out. It's a clean screen. Perfect. So this is a very, very powerful, useful trading chart. You can see that happening. Look at that. So, the E-mini players, the futures guys who bought it, let's say around 23, 29, right now are up about a point. And you can see the movement right there. I'm zooming in. And I still think we're, it probably goes up to 23.36. That means futures will be down about 8 points from now. Will only be down 8 points, probably within the next hour, hour and a half. We don't know. Or we could slide all the way down here, which would be nice. Testing the 23.20 level wouldn't be too bad. And this is the chart that you'll be seeing a lot tomorrow, and you'll be seeing all week. Some of you make some great money off this. So, this is the naked chart without all my lines on it. You can see what's going on. We were up here. I'm going to show you a 4-hour chart here to see where we're coming from. So this is where we are, okay? And you talk about volatility, that's volatility. Now this is definitively, at this point, a double top. And that's why I'm saying that the short-term trend change on those moving averages is bearish. But bearish turns bullish rather quickly. So saying all that, just drawing this in front of you guys. After all, my service is a technical service. This buffer zone here, I only got about 30 seconds, so I'll draw a trend line. Well, you'll be seeing a lot of charts tomorrow. There you are. Isn't it amazing? Let's touch this. And reverse it. That's actually from Friday.